Nigerians are saving for the rainy day, as are many other Africans. The International Monetary Fund rated the largest economy on the continent as the 11th country with the highest private savings in sub-Saharan Africa. And Africa's newest, highest crude oil producer, Angola, is ranked first. In its paper, the Private Savings and COVID-19 in Sub-Saharan Africa reports, the IMF found that private savings in Nigeria climbed from around 19% in 2019 to about 24% in 2020. The IMF noted that savings is the most important source of financing for Nigerian households' survival, particularly during COVID-19, followed by loans, goodwill, and working. The paper found that real per capita income growth remains a key historical determinant of private savings in the region. Joining me is Mukhtar Mohammed, CEO, Asher Dynamic Solutions, and we'll look at this right now. Mukhtar, so this survey cuts across decades of savings culture from the 1980s all the way through to the 2020s. And we've seen Africa having some interesting periods of financial boom. So how big do you think is the savings culture across the continent, and then specifically in Nigeria as it is?
Well, I'm excited about that news. And if you go by if you put that data by what we had from CBN some months ago, that said that this household savings of Nigeria, Nigerians that have savings up to 500,000 is less than 2%. So with this report now, it sometimes makes you feel who is getting the right data, who's not getting the right data. But if you listen to, if you have a report that came out from Barclays Bank, UK, and said that the total private wealth in Africa, especially in sub-Saharan Africa, naming South Africa, Kenya, and Nigeria, is about $2 trillion. So then with that, you add that to what the IMF have said, then you'll be able to say, okay, fine, I think they're right. And most of these savings, we need to know who are those people that are saving these savings. It's not just the ordinary bottom Nigerians that do not even have enough to eat that are doing these savings. I think these savings mostly savings from the rich class, and most of them are savings that come through investment in other new sectors that are becoming the toast of investors. You're talking about the technological space in Africa. You're talking about agriculture. You're also talking about establishment of startup companies. Also, those are part of what is helping finance, and then also health establishment, especially when you mention the COVID-19 pandemic. You realize that a lot of Africans, a lot of the rich made so much during the pandemic in the area, also in the health, those that invested in the health sector, especially when you look at those that were involved in laboratory investment also. So I think for me, that is the main reason why you have those savings, especially during the COVID pandemic. But we won't say that most of these savings are actually savings that are done by the very rich, neither the middle class or the very poor, because to grow an economy very well, then you need to have savings via all sectors. And these savings that we're talking about are not savings that came towards just keeping them the savings via investment that are invested in some of these sectors that I just mentioned about.
And I think you make a very important distinction that when we say the savings culture, the savings situation in Nigeria increased, it didn't increase for everyone, because we know that many people actually suffered a lot during the COVID-19 pandemic, had to sell things and had to really downgrade their lifestyles in order to survive. So when you say we need this savings culture to be able to spread across all industries and also all socioeconomic strata, how do we do that? Because the number looks good here, but when you look at probably the small percentage of people who are responsible for the number, at the end of the day, that then doesn't paint a good picture.
Yes, Tolulope, you're very right. And knowing that 2% control the entire wealth of the African continent. And in Nigeria, we have that same scenario that 2% control 98% of the wealth in Nigeria. So definitely, how do we improve this culture? I think the thing we could do to improve this culture, just we must begin to create education, let them know that, emphasize the importance of savings and educate them on what savings can do for you. Like you said it in your introduction, most Africans use savings as means of, especially the rich also. Savings is just for them to save to embark upon most investment businesses, because you don't easily get funding from banks or any part, most of the financial sector. So some of the projects you have to embark upon personal financing that you have saved, especially from investment. So what we need to begin to tell the Nigerians is the need for them to save, and not just save, but to invest. Because savings without investment mean that the money is being eroded with inflation. So we need to begin to teach them the area of savings and then the area of investment. And so with that, they begin to build a little bit momentum, because what we realize is that people can actually save, but they want for things to show up, especially when you are in the middle class, or you are in the very bottom. You want to show up that, look, I'm out of this place. But for the rich, what they are looking for is opportunity to grow their wealth, and they look at assets to acquire more assets. But those in the bottom is an opportunity to show up. So what they acquire are things that depreciate in value. So we need to, education is key to get a lot of people into savings.
So this is a time period covered for 2020, and now we know many of us expected that coming out of COVID-19 2019, things would stabilize and people would find their financial footing. But throw in the Russia-Ukraine situation, how do you think this would look now if we're to take this measurement today as it stands right now? Would we still see an increase in the savings, or would it be a decrease? Because overall, the Russia-Ukraine crisis has hit every socio-economic strata.
Definitely. To look, if I ask you, are you saving more like you were saving some 3-4 years ago? I'm sure the answer would be maybe
would be no.
No, yes. So because the high rates of cost of goods and services have gone up, especially consumer goods, that day-to-day transportation have gone up. The price of gasoline has also gone up. So definitely, if you take that data today, like I said, even if the CBN report that came out some months ago shows that just about 2% of Nigerians even have savings, and most of those savings are just about less than 2% even have 500,000 as means of savings. So definitely, if that data is taken today, definitely a lot of the people that had savings those time, I'm sure most of them have exhausted their savings. And when you look at inflation also, you realize that a lot of people are not saving so much again. I think if you take that today, the figures will be different.
Okay, so there's something else the paper found out, and the paper found that real per capita economic growth remains a key historical determinant of private savings in the region. So let's look at Nigeria. Nigeria's GDP per capita for 2021 was just about $2,000.85, about a 0.58% decline from 2020. Then for 2020, it was actually $2,097, which was a 5.95% decline from 2019. Nigeria's GDP per capita for 2019 was $2,230, a 9.97% increase from 2018. And then if you look at 2018, it was at $2,028, which was also an increase from 2017. So you can see a bit of the fluctuation there. But in the past 2 to 3 years, it's actually been on the decline instead. But what is that link? What's that link between real per capita economic growth and being able to determine a private savings culture, or the success for private savings in Nigeria?
Job creation is the key. It's when people have jobs, they are able to earn, and then they are able to save. And then the other area is business, new frontiers in business, when people are able to come up with new businesses and their businesses are doing very well. Then that is when the savings cultures definitely improve. But definitely the key to driving per capita income growth by savings is to create more jobs, and not just high-paying job, not underemployed and employing type of job. So the key to that is definitely creation of job, and you see those numbers going down. And when you put that number via our data in terms of job losses and job creation, then you realize why these numbers have been coming down for the past 3 years.
So my final question has to be this, because in a way, I was excited to hear this, but when you now really get down into the nitty-gritty of it and you see who's responsible for the increase, it doesn't spread across. So is this something that we should really be happy about, given that it's not being spread as far down as it should?
I think it's something we should be happy about. It's something, I think, something positive for the economy, then something to begin to educate the lower class on how they can move up to that ladder. I think that's what we should be doing more, not really just so excited about the news. How can we get more Nigerians into the saving culture? How can we have financial inclusion? And if you look at a lot of technology is helping Nigerians to save. A lot of technology companies have come in that are helping Nigerians to save day to day. Normally, before we used to do the normal traditional means of savings, which is ajo. You see somebody move from one house to other every day. The person makes money and he save 5,000, 500 naira, 100 naira, 200 naira. So I think we need to begin to bring technology into and then a lot of financial inclusion. Then we'll grow our saving culture because saving culture is what leads to investment, and investment is the key to wealth creation. It's what will drive a lot of people out of poverty, not just in the area of job. We can have many jobs, and if you have job and you are not savings from your job, then you cannot get to the next level. You can just look at that when you look at Nigeria as a nation, because we did not save during the raining days when we have so much. We are suffering from it now. So I think what individuals should do, they need education on savings and also to let them know that it's not just savings that takes you to the next level. It's what you do with what you earn after you save them. Then you look for good, profitable investments. And not just short-term investment. If you look at this data, it started from 1983 till date. So that is the way you should plan your savings plan. The most shortest savings plan you should have should be a 5 years plan, and the shortest investment plan you should have should be a 10 years plan. So it's something that, like I said, education is key towards achieving these numbers going forward.
All right, Mukhtar Mohammed, thank you as always for your time today. We'll see you again soon.
My pleasure, to Lope. You have a fantastic weekend.
You too. And the saying, as I said earlier, says, save money and money will save you. But given the current economic situation that many of us have seen over the past 2 to 3 years, it's not enough to just save money. Now you have to put that money you're saving to work for the future. And I hope that's the takeaway you have from this conversation as well. You're watching Business Edge. I still have one more takeaway to give you, and that's NC4 to watch. Stick around. And these are a few stories that we are tracking at this moment. We start in Angola, where following his swearing in for a second term as the country's president, João Lourenço has vowed to push ahead with economic reform and hailed voters' tolerance. He also promised to push ahead with reforms to encourage the private sector, expand the offer of goods and services, and fight youth unemployment. The European cocoa and chocolate industry is offering to share data from cocoa farm locations with top producers Ivory Coast and Ghana in an effort to ramp up the fight against deforestation in the sector. Cocoa traders, consumers, and producers are coming under increasing pressure from governments to ensure their beans are not grown in protected forests as the global fight against climate change accelerates. The value of Ugandan government bonds traded on the capital markets, secondary markets, increased by 67.4%, representing 16.2 trillion shillings in the second quarter of this year. This is up from 9.7 trillion shillings in the first quarter of the year. The rise in value of the treasury bonds demonstrates a high appetite for Ugandan government treasury bonds from investors due to the high yields in return for their investment. And finally, to end the week, oil is headed for a third weekly loss as a deteriorating global economic backdrop stoked demand concerns, and a buoyant U.S. dollar made crude more expensive for most buyers. WTI edged higher above $85 a barrel, but remains on track to finish the week more than 1% lower. Consumption is being threatened by a hawkish Federal Reserve, the risk of recession in Europe due to the severe energy crisis, and China's struggles to revive its economy. And that's the business we have for you, wrapping up a week of African finance, the economy, and business, making it front and center right here on Business Edge. Don't forget to follow us on social media. We are at News Central TV. You can also download our mobile app and subscribe to our YouTube channel. If you've missed any of the conversations throughout the week, that's the place you can go and find them. And watch us live. We're on DSTV channel 422, Star Times channel 274, Avo TV, as well as a number of other platforms. Until Monday, 11 a.m. West African time, I'm Tolulokwe Adileru Balogun. I hope the week was profitable. Now let's make the week a restful one. I'll see you on Monday.